Now drop whatever you're doing and pay attention to me very, very closely for the next 10 minutes. Yes, of course, you could be playing Fortnite, but you decide whether what I'm about to show you is a lot more important. Now, this is Mohammed Al-Erian being interviewed on CNBC, and unlike the bozo Tom Lee that we listened to before that is talking to you in double speak, Mohammed Al-Erian is being very clear about what he thinks, where the market is headed. Let's pay close attention, let's take a listen, and of course stay till the end, because there I will discuss my own technical analysis. I will tell you about the Patreon discount, about the community, and many other things you want to know about that you don't want to miss out. So stay with me until the rest of the video. Don't forget to smash the like, it is absolutely 100% free. So let's get into the watching.
And more. Let's bring in somebody who knows. That is Mohammed Al-Erian. He is the Chief Economic Advisor at Allianz, and Interactive Broker Steve Sosnick is still with us. Mohammed, I feel like, and you'll appreciate this, or you'll yell at me, I don't know, the latest economic data is like the economic version of the New York Jets, your team. Because we always have this hope, and then it's just letting us down. But there is always hope. So do you view this latest round of data, I don't want to say as meaningless, but do you view it as long-term, or dare I say, transitory?
So thanks for having me, Brian. I will ignore the Jets reference, although it is accurate. I will ignore it. Look, the image of Rick today trying to find when it was that consumer confidence was so low and going through his whole sheets, and he couldn't, is one that's going to stick with me. Having said that, the survey data doesn't translate into hard data in any predictable manner. Secondly, there are three incredibly optimistic views in the marketplace when it comes to the economy. One is, even if the consumer were to slow down, it doesn't matter. We have other growth engines, AI. Secondly, the inflation side also wasn't good today in the survey. There's the view that inflation will be transitory. And third, there is the view that we have policy offsets. So, I understand why the conventional wisdom is ignore the consumer confidence number. I wouldn't ignore them so quickly. I do believe in behavioral economics. I do believe that there are tipping points in the economy. And I also think the US doesn't control outcomes as much as the market thinks. So when I put all that together, I don't automatically translate the really awful number into the economy, but I don't share the optimism that is widespread among the economic analysts on Wall Street.
Yeah, and as we dive into that, it opens the question, Mohammed, of what the Fed should do, especially depending on who's in charge. When might Kevin Warsh actually take over? And what if Powell remains de facto leader?
So first, we heard about the delay today, and I have no reason not to believe that it's due to paperwork. But it does mean that we're getting awfully close to the May 15th date when the chair's term ends up. I don't want us to be in a situation, Kelly, whereby the chair stays in as an acting chair and President Trump decides to have a go at the Fed. I don't think that's in anybody's interest. So my hope is that we'll get the nomination. My hope that this will open the way for a vote by the Senate. As you know, there's other things there, including the DOJ investigation, because the alternative is going to be a lot messier.
The way I'm going to look at this, and I'm certainly not going to dispute this, is...
Well, it sounds like he agrees with you, Steve.
Yeah, to a certain extent.
Like Mohammed, from an economic perspective, I don't know, Mom, if you heard, Steve's got a $6,500 target in the S&P, and so you are worried. Sounds like you guys kind of agree.
The reason why I put that number on at the end of last year was threefold. But the two main things were midterm election years have been terrible recently. The last two down years out of the last 15 were midterm election years. So we got that going against us. Also, markets have an uncanny way of testing a new Fed chair. If you look, it doesn't happen very often. So it's not like the thing we talked about before, 19 out of 20. It's like 4 in recent memory. But the new Fed chairs often get some sort of real world test. In Greenspan's case, the market crashed right after. In Bernanke's case, the global financial crisis was like right on the heels of him starting. So that doesn't mean that this is going to happen. But the test now might be the stuff that Mohammed was just talking about is a political test of the Fed itself, not necessarily of Kevin Warsh. And that should be concerning. It's definitely, in terms of things that one should be cognizant of, that's certainly an issue. The other thing, if I have a second, is I put out a piece, I think last week, called Dude, Where's My Rate Cuts? And, I think the market mentality about rate cuts is we've basically around the world, all the global central banks have either priced out 50 plus basis points of cuts or added in 50 basis points of hikes. And that's a big change, I think, to the global outlook.
Alright, so now let's look at the charts, because we can speculate until tomorrow. I'm sure everyone has their own opinion about what Kevin is about to do. As we know, we have about a month until the 15th of May where the decision has to be made. Of course, as you can see, Mohammed and Steve are a lot more in agreement and can see more economic strife in the system. They're not as optimistic as Tom Lee. Now let's examine what we can see here on the charts, because that is at the end of the day what is my community is all about. We are a data-driven analysis community. We don't just, I feel like that means or that equals to, because that makes no sense. That's just arbitrary speculation. We don't do that in my community. So let's look, because we're right now still about 9 minutes before the market open. The market does appear to be a little bit more positive at the open. We know we closed yesterday at roughly around 6,967, that is, so we're roughly within the same vicinity. If we look at the current price action, we're roughly in the same vicinity that we've closed yesterday. Pay attention, there is a new layout right above me that shows you how the stochastic relative strength index functions, how to read it, to understand what the momentum is trying to imply. Now I want you to pay close attention to what we are seeing right now from the smaller time frames to the larger time frames, and of course hopefully we will be able to examine that as the market opens up. So for right now, we see we're kind of hovering around the same levels that we closed yesterday. As we said, on the 5 minutes, the price action, or rather the momentum, appears to be a little bit more bullish given the channel and how it was respected, at least you can see in the shorter term, moving within the larger framework. That will make full sense if we will retest again that 6,981. Those of you, by the way, don't know, I have warned and spoke about this with my community, and we have analyzed this many times in advance. We spoke about this in the latest Academy meeting. We spoke about this pretty much every day for the last several months. The current levels that are being tested, in fact, as you can see as I'm zooming out, even on the way up, the very same levels, the very same support and resistance levels, that is, that were objectified, sort of confirmed on the way down if it's prior, right? If we're looking at right here, all these levels have been confirmed prior to them now playing a role again. If we go to where we're at right now, so the price action right now is hovering and being a little bit more bullish, but here on the 30 minutes we can see a turnaround forming. We can see that the momentum is crossing over, a shift over. We haven't even rode high, we haven't even gotten to the 80 range, which on the stochastic RSI represents overbought territory. Oftentimes riding that territory within or higher above that 80 represents more so bullish momentum, as I tend to call it, bullish on steroids. In other words, this is where we actually get to see the bullish action happen, when the momentum crosses over that 80 and rides that high. As long as it rides that high before another crossover, as it will signal weakness on smaller time frames. Of course, before it does that, that's how we do the reading. You can identify a diminishing momentum or increasing momentum one way or another. Again, depends on what the stochastic RSI is telling us. So right now, objectively, we are above the 50, between the 50 and what we would consider the neutral zone. It does show us directionality. Again, everything above 50 is more bullish. Everything below 50 is more so bearish. So yes, we do have directionality, but we're also seeing a crossover. What will determine whether that crossover is for the purpose of crossing higher, breaking out, or breaking down? So now let's see. First of all, as you can tell right now, the actual level we've been riding throughout the night, mainly throughout the morning, is that 6,972. Of course, as I've said before, again, a level that have been confirmed before, retested, acknowledged, and we are very well aware of. English much, bro? Sorry, I had to. Let's go to where we're at now. Come on. And we will see that the price action crossing over, as we said right here, and well, about to become a little bit more bearish. Let's see for the 45 minutes. The 45 minutes, in fact, never ended up crossing above the 50. So, in fact, although we are bullish dominant, seeing the green line, the K, being dominant right now, but we are seeing some form of we are seeing some hints and signals of potential convergence towards that 50 range, indicating that we are still in bearish territory. All this is a rebalancing or mitigation correction on that bullish momentum. So the same way we have corrections on bullish movements, they have bearish corrections. The same way when we have bearish movements, we have bullish corrections. So all that kind of tries to show here that all this is a mere correction. Now the problem starts is again here with the hourly. On the hourly, we see we still are bullish, remember, still in bearish territory, but still are bullish objectively. The main issue is that we are hovering around the all-time high, that $7,002.28 if I'm not mistaken. Now, if my calculation is correct to where we are in terms of this cycle, which affects highly what can be set as a new all-time high or not set at all. In fact, what we are looking at mainly right now is the market setting up new lower highs and lower lows. Again, if my assumption of our place in the cycle is correct, or analysis, if you will. Right now, it is kind of very important to see whether this price action will result in a crossover over the previous all-time high, because if it does so, that may imply that my assessment of where we are in the cycle is wrong. On the other hand, if we do get here a lower high, as it seems that we are forming right now, the price action right now, as you can see, instead of being sharp moving high, is now moving more so teetering sideways and losing momentum. The thing here is could be just simply because the market hasn't opened yet. Now we know the ceasefire, technically speaking, is kind of holding on still, so there is that positive sentiment in the overall market right now that can drive and fuel this movement to the upside, which again to some extent can be worrying, and I understand that because people may think, oh, that's it. First of all, people such as Michael Burry or Greg yourself, you are all wrong, and this is not a crash, that was just a mere correction. Look, you got us all hyped up for nothing and blah blah woof woof and so on and so on. Again, let's continue looking at what the momentum says, because most of the people, at least those who are aware and understand and follow my analysis and just the community, the channel in general, know that what I sound is not my own opinion or arbitrary feeling about things, but rather what I can read from the technical analysis. And that's, of course, why I highly advise people to join the community, so then you can understand people like myself a lot better when we talk about these sort of events and explain how they function. And more so, I even more so recommend the difference. Here's the difference between just joining the Patreon or being a one-on-one student in the one-on-one academy, where I actually tutor you how to become your own independent analyst. You don't just understand when you become a Patreon over time, of course, staying in the community, you know, listening in, joining the meetings and so on and so on. Of course, you get a little bit more of an understanding of how technical analysis functions in general, how what tools we use, how we use them, what kind of reading we get. You, of course, get to follow up on the analysis of someone like myself. You get to see the consistency and so on. But what's more interesting is to become that one-on-one student who actually learns these analysis techniques themselves. So then instead of just being able to understand a little bit better what someone like myself is talking about, you'll be able to become your own independent analyst. More so, you'll use and apply far more advanced tools that will allow you to see, and will show you a little bit more in depth in terms of whether it's time duration analysis over longer periods of time. In fact, vice versa, it will allow you to analyze the very quick occurrences in the market, the day-to-day price action, that volatility that at the end of the day mostly is noise, but still you'll be able to understand it and what sort of meaning it has, if any at all. Okay, so as we can see right here on the daily, we've been riding high for quite some time. On the 4 hour, pardon me, on the 4 hour. On the 1 hour, we still are bullish, which kind of goes hand in hand what we've seen so far. But, and people are like, Greg, well, we're very bullish. But, well, you got to understand that the smaller the time frame, the shorter the length or the potential duration of the trend that this represents. In other words, yes, we are bullish, but more so, don't forget, pay attention. Pay attention right above me. It explains exactly we are in bearish territory. In fact, objectively speaking, since we just now are penetrating, if you can see with the K and the D, both green and red lines are penetrating the 20. So only now we're moving into neutral zone, still on the side of the bearish momentum, but still we are penetrating inwards. Now, let's look at the 4 hours, which is closer to the daily. On the daily, we realize that actually we've been squeezing our momentum to death. Usually when we've been riding high for quite some time, what will happen is the momentum will turn around and will basically break over, and once we get that dominance of that red line or the D, it represents our bearish momentum, which it doesn't necessarily represent that as much as it represents a longer duration moving average, which the loss of buying power is being represented through, and thus we can read what is a people executing positions, more so a corrective measure, versus an actual bullish downwards trend that penetrates that 50 range and becomes actually bearish. Now you understand the difference, boys and girls. I hope it's pretty. Look, at the end of the day, all this stuff is pretty simple. It is pretty much like a speedometer, but for your stocks instead of your car, right? It's not all that complex. Once you go and reach a certain limit of speed, if you shift over, your RPMs drop and you start over very, very, very slowly, so to speak. And sometimes you even shift over into reverse and accelerate into reverse. That depends on the cyclicality. So now we're getting into the interesting bit. We can see here on the daily, the same way we've exceeded that range on the bottom end. It's not such an abnormality for us to exceed it on the top end, still retaining the directionality of the channel. As you can see, we've been establishing that channel for some time now, retesting various support and resistance levels that have been established a long time ago. If you pay attention, these two blue lines that I've been talking about, my community is more than well aware of. They've been established around October, December 2025. So these were at play and people should have been aware of for quite a long time. Those who are not aware, of course, are not such great experts in technical analysis as they like to present themselves. These are very important. And as you can see now, they play the role again right there. And of course, there is a high presumption for us to retest them again. And so, as you can see, the technical analysis that we're seeing right now, beyond even going to the weekly and so on, will already coincides very neatly just simply by seeing that daily collapse of the momentum very shortly to come. So yes, this is kind of an urgent warning, if you will. We are seeing how the price action will drive lower fast, and people will be screaming and tearing their hair off their head within a couple of days, maybe a week or so. Yes, sure, maybe this process will be dragged out and we will see a little bit more sideways movement within the ranges we're in right now, sort of retest them just for the purpose of breaking down. As you can see, I kind of gave both scenarios here, a sharp breakdown and both a stalling kind of scenario right here at the top. Wink, wink, stalling, exactly what Trump is doing right now. So as you can see, again, the market is signaling another major correction downwards. In fact, arguably that 6,500 that Mohammed Al-Erian and Steve are talking about right now are in agreement. This is just the first steps. We will continue even further lower. Again, it may occur more like so or more like so. This is just general guidance. All of that is visible where? Like, Greg, how are you saying all that? Well, pretty simple. Look, on the weekly, although we are bullish right now, which is just a representation of what that major correction we've had in the recent, days, really, that most of it sort of happened through the last week or so. As you can see, most of it is being represented here, but we still are below the 50. Once both of these forces turn around with that daily collapsing, once that daily will start breaking downwards, the momentum will start fading, the more bearish it will become, the more that bearish momentum, the more it penetrates lower to that 50 and even lower range, it will find expression right here on the weekly via convergence divergence around the 50. And so we're going to get a very similar scenario like what we had here, a move up, convergence divergence, and a breakdown. So all this is going to be is just stalling for the purpose of continuing a severe downtrend. How do we know that? Well, the main trick, or the main sort of point of information you want to rely on, is your larger trend, of course, is your monthly that is in full-blown breakdown. And if you want to pay attention to your quarterly, which just this quarter just started. So what people don't realize, this crash, why are we saying 6,500 and far lower? Because what you don't realize, that the numbers we're seeing right now and that bearish behavior that is in the system already is just the temporary short range stuff. There is furthermore far more bearish momentum being generated and accumulated over this period. Okay, so this is the best rudimentary explanation I can give you on the technical side of things, so you can see that Mohammed Al-Erian is not just talking out of his gut. He knows, he sees the signs, and understands that it doesn't have to be necessarily being driven by the current war or geopolitical conditions that are revolving around the Middle East, it could be something more China related, it could be a lot more oil related. Yes, oil dropped a little bit from its 100 handle, but we're still around the 90. That's 3 times higher our normal highs. 3 times higher our normal highs. Profit margins, okay, razor thin profit margins of various smaller companies that make little, plastic pichuvkes are being cut down to zero at this stage. In fact, some of them are surviving on the capital they have right now, what they've been generating throughout the years, right? And so once that capital is chewed through, guess what they'll have to do? Close. You know what that will do to the rest of the supply chain? Guess what? These few other companies that still remain can hike their prices, which will of course force the larger companies that get these smaller parts to build up their bigger whatever car, washing machine, you name it, right? Will hike their prices, which will translate eventually to us, the consumer, and there you go, even higher inflation. So that's kind of how oil works. I'm not even talking about the energy aspect of how oil affects us all. So inflation fears, Kevin Warsh, all of the above and then some, private credit issues. Yes, we do have the banks coming out right now and showing good earnings. I know, kind of higher than expected, but the banks usually are doing well until they don't. And the banks are dependent, usually to follow after the major straw that breaks the camel's back, and then we understand that really most of whatever is propped up by the consumer is, gets weaker, has no money, no liquidity, and thus, and then the banks start chasing us all, for our credits and so on. So as you can imagine, this whole thing is kind of cyclical and as a snowball, if you will. And if you pay attention to what experts such as Mohammed and Steve are saying, including myself, of course, I'm just showing you my technical view on things, and of course things can develop and change. So by the way, right now, if we want to look at the price action, today's market has already opened up. We are seeing that we will basically opened up with no gap. Now we moved up a little bit more of that bullish momentum. Now let's see how our momentum translates on our stochastic RSI. Still bullish on the 5 minutes, 30 minutes is, becoming even more bullish. So there is a presumption we're going to meet our all-time high. So the test within that vicinity, our 45 minutes is still bullish. Remember, it is in bearish territory, so a bit problematic. 1 hour, a little bit bullish still. Objectively, again, I have a bearish position. I'm prepared for a far major breakdown, and yet I'm always have to be objective. The one thing you'll get on this channel, irregardless, always, no matter what, is objective analysis of the charts. Whether I like what I see or whether I don't, you're never going to hear any biases. You're going to hear my own opinion, maybe in between, but mostly you'll hear objective technical analysis. As you can see, I want the market to break. I will benefit from it. But in reality, right now, the market is still bullish. I got to acknowledge what I see. On the 4 hours, though, similar to what we saw on the continuous contract, on our futures contract, we are seeing a breakdown of the momentum. In fact, we already have turned over. We're already seeing that. We've already seen that crossover. If you want to see it a little bit more up close and personal, here it is. We already see the crossover of the forces. Right now, our red line is dominant on top of the green. In other words, the more dominant line is the one that is on top. Right now, we can see we are 92.89. We basically have a margin of about almost 3 points. These 3 points are quite significant. They're showing divergence, although we are seeing some potential convergence on the visual side of things, which still means that that is a little bit more stalling. Again, I'm not sure which event the market is waiting for, but there are major signs and signals from the market on the larger time frames. Again, we've been running hot on the daily, as you can see as well. Usually you'll find the 4 hours and the daily in agreement. The weekly is still bullish, still headed towards that 50 range, at which I think we will see a crossover of the forces, dominance of the bearish momentum, and a turnaround. Why? Because we're seeing it already formulating right here on the 4 hours, and the daily coming in sort of through that riding high element that we can't be riding high too long. At some point we simply get exhausted, our momentum, our volume, our liquidity gets exhausted, and simply we start seeing a flip over of the momentum. And as we know, we go to the monthly. and our monthly is still extremely bearish. In fact, if you watch my videos from a month and a half ago, I was showing exactly that. At first, we had very clear divergence, which was very weird, almost irregular divergence, if you will, if you pay attention to this portion, how the two lines are separating from one another, right, diverging from one another. That signifies a potentially prolonged and longer duration downtrend. And as I said, all that bullish momentum that we will see, we've already seen it in preparation. Again, my community was more than aware of it. I'll talk about the discount and all in about a second. I warned and said exactly, you can watch my videos from a month ago now, like I said, and see how I was saying that these, instead of crossing over, just will become a little bit more parallel, indicative of a corrective movement, not a bullish movement. We are still extremely bearish. In fact, everything we've seen so far is just the sheer beginning. I remind you, ladies and gents, on a quarterly, what we are seeing signifies a far longer duration downtrend, which may last several quarters, which can mean at least a year and a half maybe, easily, no issues. What we're seeing here, in fact, maybe even longer. We're not going to try to time the market. This is not what we do, but we can identify and recognize the signal or the indication of what the market is trying to tell us. That is it, ladies and gents. That is about the technical analysis. Real quick about the community. Those who want to know, you can still join on a discount. The community, the membership is still discounted 30%. Here is the only one option. If you want to join the one-on-one academy, you'll have to go to the actual Discord, whether from the outside of it by going right here to need help. I'll show you in a second, ladies and gents. You can go to need help, right? There is this portion. Okay, let me bring it in so you can see it. You can go to need help if you don't want to sign up for the Patreon. You want to straight away sign up for the academy, right? You go to need help. You'll see this support ticket embed thingy. Then you press academy application, and then you'll have an academy application for you. I'll come in, I'll ask you how you're doing, what you need help with, and we'll sort of take it from there. We'll do a little bit of a Q&A, a little bit of an interview, and progress from there. Of course, there is the rest of the Discord. Oh, wonderful. I see my camera went bananas. Hold on. Let me try and fix it real quick. In the time being, just to be clear, you can join through the link up above, right? Through Patreon. Why is my camera not working now? What is going on? Let's see if that will help. In any case, watch the screen, 70%, 30% off, because this is right now, this is a $100 tier, and it is 30% discounted. You can join at the $30 and learn more. Of course, I highly recommend asking about the Academy. The Academy is also still discounted. The Academy will be priced up eventually in a couple of months, or maybe even in lesser time. But what you need to know that all of the above, the community, the one-on-one academy, which the difference between, like I said, between the academy and the Patreon is that in the academy, you, instead of just learning to understand the more so rudimentary sort of facets and elements of technical analysis, you learn how to understand the more in-depth elements and to become your own independent analyst, if you will. That's it, ladies and gents. Unfortunately, my camera went crazy. I will see you on the next one. See you in the community and see you in the comment section. Don't forget to tell me how you feel and think about this all. And of course, smash the like, as it is 100% free. See ya on the next one.